hit that record button. So again, we're going to be covering the basics of charting. And then I'll also do some questions in the chat as we move along to make sure that everybody understands these concepts. So what I don't want to happen is that we go through something and somebody ends up getting left behind. I want to make sure that everybody who's on this call gets off this call having a clear understanding of, again, the basics of charting. So we're going to look at today is SPY. All right, for those who don't know, SPY is the ETF that tracks the S&P 500, right? And we're going to start off with what we're looking at when we're charting. So the first thing we want to make sure we're looking at when we're charting is that we have a clear understanding of trend for the time frame that we're looking at, right? And so trend, of course, is going to be different based on what you're looking at. So if we were to come in and we were to only look at this section of the chart, if we would come in and look at just this part right here, right, then we're in a downtrend. I'm going to teach y'all how to identify that and why that's so, right? If we come and we only look at this section of the chart, right, zoom in a little bit, we're uptrending, okay? So we're going to break down that thing, right? The market moves in three ways. And this is the stocks as well, right? So these things are going to apply across any time frame, whether you're day trading, swing trading, scalping, and whether you're on a 5 minute, 1 minute, 1 day, 1 week, however many, whatever time frame you're on. So when we're looking at identifying trend, what we're looking at simple way is looking from the left of the screen to the right of the screen and seeing which direction, if you were to draw an arrow from price to price, right? What direction you get your arrow going. So from the left to the right, we see price moves down to up, right? So that's how we easily know it's an uptrend, right? That's the visual aid aspect. I just drew a trend line on accident, right? So that's the visual aid aspect. When we come over here, right, you see from left to right, we're going down, right? Clear as day, down. That's giving us our downtrend. Okay, now when we're breaking this down as to why that is, we're looking at our highs and lows, but not just the highs and lows, because there are highs and lows on every candle. We're looking at what we call swing highs, swing lows, also known as pivot highs and pivot lows. And that's why you see when I'm trading and charting, you often see this on my chart. And I'll show you guys what this is. This is the pivot points high low on TradingView. Again, that's pivot points high low. I usually set mine to 5 across the board based on whatever time frame I'm on, so it doesn't get cluttered. All right. And so what that's going to do for me is it's going to automatically plot these low points so I can have a clear understanding of potential stop losses, potential targets, and just where these highs and lows are on the chart without me having to hover my arrow. Okay. So when it comes to these swing highs and swing lows, what we're looking at is for every move, as we move through the waves of the market, the ups and the downs, we're looking at where are these lows coming in, where we start moving back up, where are these highs at, where we start moving back down. All right. And so what you'll see is that this is a low. We come up, make a little high, a little low, high, low, high, low, high, low, high, right? And this kind of just goes on and on and on and on and on. All right, this will be the low right here for that. All right. So that's what we're looking at when we're seeing these things take place in the market. Okay. And this is the visual, or the technical rather, aspect of why you're looking left to right and you see an uptrend, is because the highs are getting higher and the lows are getting higher as well. Okay. So far I'm gonna pause there. Does that make sense? Looking at these highs and lows, being able to see where these high and low points are coming in. Why is in the chat if that makes sense? If it's making sense to understand this uptrend. Yep. Why? If it's not, put it in and then I'll pause and you can type out a question. But that's it, right? We're seeing the uptrend, but that's how we're noticing it. And the reason it's important to understand that this is based on these highs and lows is because that's how you can start to catch when the trend is potentially going to flip, okay? We got Y, so I'll keep it rolling, no end so far. All right, so as we're watching this play out, what we're gonna be looking at, this is a daily chart. You can see it in the top left, where it has 1 day, right? That's the D. So as this is playing out, we're looking to see continuous highs and lows increasing, right? So as we're going through it, this is something we'll pause at, right? So right here, we already know we got this low, we come up, make this swing high, we make this low. This is a, get this off. So this would be a higher low, and that's how you identify them, right? This is a higher low because it's higher than this low. This is a higher high because it's higher than this high, right? Same if we continue right here. This is a higher low compared to this low. This is a higher low compared to this low, right? So what you want to see is those continue to happen. And typically, as long as you have one of them moving in that direction, you're going to keep going, right? So when we get right here, this is why I paused this, and we're looking at this as if this was real time. We see that what we just had was another swing up, right? We put in a high here, move down, put in another high, move down, put in another high, okay? So a couple of things to notice, and this is you thinking in your head about what can happen, because when we're trading, what we're trying to do is predict what's going to happen next so we can get into that position and capitalize on that movement. So when we come down here, what we just did was we made a lower low, right? And hopefully that makes sense. If that doesn't make sense, put it in the chat. But I'm gonna keep rolling because it should, right? Higher, 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 right? We came and retested, which just means that you came back to that previous low. So this low, this move right here, is the same low as this one. So that is not a lower low, right? When we come here, we make a lower low. So on this lower low, we're not saying trend has reversed. We're saying, okay, trend might be potentially going to reverse. If we don't make a new higher high, then we might be looking at a reversal. Okay, here's how you apply the meaning behind it, right? And so when you're trading and charting, what's helped me is looking at the story in the candlesticks and the charts and the price, not just looking at this is just some price, this is just some lines, this is just some candlesticks. But as I'm seeing these things happen, I'm breaking it down in my head, like, what does this mean, right? So what this means is buyers, this whole time through, buyers were consistently stronger than the sellers, right? Sellers would come in, but they weren't overwhelming the buyers to the point where we made any new lows. Buyers kept stepping in, pushing it back up, stronger than it was before. Sellers came in heavy, buyers shot it right back up, right? But now what we're seeing is that the sellers are coming in and they're not breaking. This is how you form for support and resistance, right? We'll get to that, right? So they're not breaking through, but the buyers, first of all, are starting to lose steam, right? So peep over here, how we're coming off these lows, we're getting these larger moves up, right? Now look, when we zoom in at where we're at now look at these moves. These moves up, small, right? I see that question, Jesse, I'll get to it. All right, so we come in, we make this lower low here, okay? And that's telling me, oh, snap, the sellers actually overtook the buyers this time because they were able to push it lower than they did before, all right? So in my head, if we don't make a higher high, we're looking at a potential trend reversal. And what that would look like is we fail to break back above this low, all right? So then we come back down, we move up, come back down, retest, all right? So this is another low, but it's the same low that got tested. And now we're testing that high again. So this is where we're looking to see, are we going to break above and form a higher high? If we don't, then it means that we're probably going to start moving back down to these lows again. Give us some more candles, right? And we broke that high, okay? So now we have made another higher high. We're continuing our uptrend, although it's weak, right? And again, why am I saying it's weak without looking at, and this is funny because someone said it on my boot camp last night, is Jordan learned all the indicators and then doesn't use them. All right, this is how we know it's weak without indicators. Again, we see these moves are starting to get a lot smaller. These moves are getting a lot smaller. So we're still trending up, but it's just showing signs of weakness. And that doesn't mean it's going to flip. It just means we're weak right now, right? And so we continue to move up. All right, I'm just giving us a couple more candles to look at. So we continue our move up, right? Trend is still the uptrend, right? We come down, we do make another lower low, but then we shoot up and make another higher high, okay? So that's how you understand trend. And that's the same thing if you look at a downtrend as well. Okay, so I'm gonna find us a downtrend, right? So when we're looking in here, and this is still on a daily chart, but this does apply across. When we're looking at this area of price action, we see the same thing. All right, hopefully it's popping out easier to you now where we see that these highs are continuing to get lower and lower, right? We come up and we make a new higher high, but then we come back and we make a new lower low, all right? So we're continuing. So that's trend, okay? And when we have periods of consolidation, which is our sideways movement, try to find real quick. Yeah, this is good enough. So when we have our periods of sideways movement, that's when you'll see that these highs and lows just continuously stay the same, right? So that's our consolidation. And you can trade all of these, right? So just because it's moving sideways doesn't mean you can't trade it. You're going to trade it within the range, okay? Right, but we see that these lows continue to be the same, right? And our highs continue to be the same on all these moves, right? Up, down, up, down, up, right? So that's trend. Why is in the chat if that all made sense? Give me an N if you're confused about anything, and then type the question. But there should be, after we move past trend, there should be no confusion on how we see trends in the market. To answer the question, Jesse, I use, you can do both. I typically will use the wicks because that's where price still move, but I acknowledge both. I acknowledge body levels and I acknowledge wick levels as well. And we're gonna move over to that next, okay? Or again, even if we're looking at the price, even if we're looking at smaller time frames, right? This is the 5-minute chart. On the 5-minute chart, we still see lows continuing to increase, right? Highs continuing to increase. That means we're trending up, okay? Make sure we're all good on that before we continue. Got you, thanks. How do you set those lines that you showed on price? Oh, these, I think is what you're asking about in the chat. Again, this is the pivot points high-low indicator. As far as the lines that I'm putting on my chart, I'm going to be using this paintbrush tool to draw, possibly to circle. And then this horizontal line, which will look like this. And a trend line, which will look like that, right? So let's roll into support and resistance, supply and demand, support and resistance. So we can have an understanding of that. No problem, Andrew. So you get an understanding of that. So we'll switch over to whatever, forward, why not? Doesn't matter. All right. So when you're looking at these highs and lows, the first thing that's going to actually stick out to you is that when you are creating a trend line, all you're doing is connecting highs and lows, okay? And I'm gonna clear out this chart. So when you're looking at a trend line, what you want to have for a trend line is 3 touches in the same direction. And you're literally just connecting the dots, right? We're connecting the highs and lows, okay? So if you're setting a trend line on forward, then your trend line will look something like that. Keep in mind that these lines you're drawing on your chart, especially lines that are diagonals, these are guides, right? So the way you draw a trend line on your chart, it might not line up precisely as I do, but we see we have our 1 touch, 2 touch, 3 touch, right? And then we end up breaking trend line and going back in the other direction. So what does this mean, right? And we see we have it to the downside as well. All right, so what does this mean? So the trend line is giving us a gauge of the trend. Again, we're just looking at this when we're again, lower highs, lower high, lower high, lower high, lower low, lower low, lower low, lower low, right? Lower lows all the way, lower highs all the way. So we know we're moving down. This is our trend line. The reason why trading breaks of trend lines work is because you are now catching the reversal of the trend, right? So if someone says I'm trading the break of this trend line or is testing the trend line, or I'm looking for a bounce off a trend line, this is what it means, right? These are bounces off the trend line. These are bounces off the trend line, right? And so when you break this trend line, all that's saying for our technical means is that we have now broken that lower low or those higher lows or whatever the previous structure was, right? Now we're making higher highs, right? So now, if we look at this without the trend line, right, you see that we had this move down here, high was made, and now we have a higher high coming in, right? That's what it means that we're breaking trend line, right? And those set up very good trades that you could take because you're catching the reversal. And just asked in the chat, we just made a higher low in SPY. If it then breaks the previous swing high, does it mean it won't make a new swing low? So if we made a higher low and then we go on to make a new higher high, then yes, you would expect that the new move low will not be lower than the previous, right? And so when you understand these concepts, like we don't have to look at the chart to understand that. All that means is that we're now breaking the trend. So SPY's chart would then look like this, right? She's saying that we just made a higher low, which would be this on our forward chart. We have this lower low. This is our higher low, right? So now we make a new move higher, which would be a new higher high compared to this. Our next swing low shouldn't be lower. It shouldn't be, right? And it's possible. Price does what price does. The market does what it wants to do. But our job is to look at what it's giving us and then make predictions based on that. And things like this work very often, right? So we just learned trend lines. We also just learned how to trade trend lines and the breaks of trend lines. And what you'll see often with these breaks of trend lines is you get what's called a retest, right? And this will be something we probably cover more into the next class. I want to keep this very simple. But your retest is going to be when you break trend line and then you pull back and you put in that new low, right? Or high on the other side of the trend line. That's going to be your test to know it's real, right? So this is us pulling back and we're seeing, are we going to make another lower low? If we make another lower low, then we're coming back in. But this low bounced up. We put in this new swing low. Now we're like, oh, okay, cool. We are going to hold this new trend breakout and continue to the upside, okay? So let's swing over to supply, demand, support, resistance. We're going to go over to plug. Why? Because it's already been charted for us, Jordan. Because I traded this. I called it out in the chat. We made money. All right. So let's look at plug. Remember, we can make money in the uptrend by buying calls. We made money in downtrends by buying puts. I'm gonna circle back to that because it's a key point I want to point out with those as well. And then in consolidation periods or sideways movement, we can make money trading either way, right? Because we're trading the bounces. So what is support? What is resistance? What is supply? What is demand? All right, support is going to be anything, typically it's a level. Typically, we're looking at a general price level where we're seeing price bounce off of. That is our support, right? So price comes down to $25, is most likely to bounce off of $25, right? Resistance is going to be anything that price hits and falls down from, right? It bounces up to 30 bucks and it drops down from 30 bucks. We're looking at 30 bucks as a resistance. What you'll also start to see if you do use indicators is that you can also have moving averages that act as potential resistance or support as well, right? And I'm gonna just throw one on here real quick. So the most popular one is usually that 200-day moving average. We're gonna come back to plug in a second, but perfect example. Thank you, Spy, for working with me on this. What do we see here? It came up and rejected the 200-day moving average. Came up again, rejected, right? So this is two examples back to back of SPY treating the 200-day moving average as a resistance, right? This is a resistance that is fluctuating with the market, okay? So remember that. Let's go back to plug. Now, when it comes to supply and demand, it's still the same concepts, but more often demand is more of an area or zone, right? Because we have to know that price isn't just always going to perfectly tag 25, 50 and bounce right off, right? But it might come into this area and get bought up. That's our demand, right? So when you think demand, think support, right? Demand, people have demand for this, they're buying it up, right? There's too much supply here, they're selling off. Supply is going to be your resistance, demand is your support, okay? And those are going to be more of zones, right? Does that make sense so far? Supply, demand, support, resistance. I'm gonna get into how you would look at them and identify them as well. I just want to make sure that makes sense. Yep. Why is in the chat? Why is in the chat? Money signs in the chat. Cool. We don't have any ends in the chat, which means everybody's getting it. I bet. So let's keep it rolling. Cool. All right. So when we're looking at identifying, I want to find a chart that is fresh. Just very unlikely dealing with me. I don't ever trade this. Bingo. All right. So when we're looking at identifying support and resistance or supply and demand, there's different ways you can go about it. And somebody asked in the chat as well, do I look at the bodies or the wicks? I look at wicks, right? I consider bodies and I consider wicks. But when I'm making most of my levels, I'm making my levels off of the wicks because price still came down there, right? And if price is likely to come to that area, then that means that I'll be able to get a better entry or a better exit because I'm looking at the most optimal opportunity, all right? How do you identify the moving average? So the moving averages are just indicators that you'll put on your chart. And there's different types of moving averages. There's EMAs, there's WMAs, there's simple moving averages, double and triple. But what a moving average is just going to compile the average close, and you can change that as well. So I'm not going to get deep into the technical part, but it's just giving you an average of whatever this number is, this period. So this 9 EMA is giving you an average based off the close of the previous 9 candles. And this will switch whether with whatever time frame you want. So we're on the 15. Now we're having this line plot based on the close of the last 15 candles. I mean, last 9 candles on the 15-minute chart. And we see again here what I just explained, right? Here we see multiple times that this 9-day EMA or this 9-period EMA is being held as support. right? And this is a completely different stock on a completely different time frame with a completely different moving average, all right? But that's moving averages real quick. So what I'm looking at, and the easiest way to give yourself levels is to start on a bigger time frame. So we'll start on the monthly. And you can do both, again, like I said, right? We can level out our wicks, and this is me using the horizontal tool, right? So we can level out our wicks. So wherever we have these wicks, we might do it. So what is a wick, right? And this is why I say I want to make sure I'm making things simple and clear to understand, because I'll say stuff in my knowledge and not know somebody might be like, oh, you know what a wick means. A wick or a shadow is just going to be that line that's coming out the candle, right? So that means the price went that direction, but ended up getting brought back into another direction. So on this candlestick, price came down here, came back up, and price also went up to here and came back down, right? So those are the wicks. And then we can also put levels on our bodies, right? Which I'll do now. And so this is the easiest way. I don't do this myself personally because I'll just look at it on a smaller time frame. But this is the easiest way to identify some levels. And then when you carry them over to the smaller time frame, you'll see that they typically hold, right? And so I'll put one more here. And then we can go ahead and we'll skip the daily, we'll take it to the 1 hour. Boom. Glad you're making it easy to understand. Thank you. That's the goal. That's the goal. Like I said last night on that class, the whole point of this stuff is to make sure y'all can learn and make money. So if anything I'm saying is confusing or you don't understand or it doesn't make sense, then I'm happy to stop and make sure it makes sense. Because if it doesn't make sense, it defeats the purpose of me doing this. All right. So we see that we mark those levels up on our monthly and our weekly. That's how we got all these lines on our chart. All right. And what we'll see is price is interacting with these lines. Right. So how do you use these when you're trading? And you can do the same manner. If you're going to mark them up on a daily or on the 1 hour, you do the same thing. Just look for those bodies, look for those wicks. But it's easier to do them on a bigger time frame and take them down. And I'll explain the reason behind that too. But these are where you're looking for these bounces at, right? So you're looking at these levels and we're looking to trade these bounces or breaks of these levels. So we see that we broke above this one. We came back to this one. We broke through this one, came here. Then we came back to this level, right? Played around this one, dropped down. Where did we drop and move sideways at? This level, right? We dropped down to this level, then we dropped down to this level, right? So these levels that you created for yourself, these levels of support and resistance are going to create opportunities for you to know where you want to take profits at, okay? What I'm looking at for these is I want to see a break and close in a certain direction on that on those levels for me to trade in that direction. So when I have this break and close of this level above, I'm looking to go for calls, right? I'm looking to buy. And when it moves up, this is my next target. Why is this my next target? And so this is where, again, you take the logic into account, right? I like to think logically about whatever trades I'm making. So if I'm entering here and we're going up here and this is my target, why is this my target zone? Because every time we've come up here, since the past couple of weeks, when we've come up to this level, we've rejected, right? So if I know that price has a good chance of coming here and bouncing down, then I'm taking my profits before it can do that to me, right? That's my target, okay? And we see again, right, this is our next spot. So now, when you're predicting where the market is going to go, where a stock is going to go next, this is what we're looking at. We're going to go either here or we're going to go here next. Another reason why this is so important, and I see some of the questions in the chat, so I'll make sure I get those, is that you're not trading in no man's land, right? You're not trading just in the middle. Because if our stock is sitting right here, right? It's still going to go either back to this level or back down to this one. But your odds, when you're looking at your risk to reward for these trades, it's not worth it to buy it in the middle where it can go up here or down here. You want to get in up here if it's going to come down here, right? Because when you're looking at that, if we're going to go short right here, we put our stop above our next level because we know that if we break here, then we're likely going to go up here. And our target is down here. Then we've created a risk to reward that's about a 4, right? So in essence, what we're doing is create an opportunity for us to make $4 while losing 1. That's the basic risk to reward, right? If we were to get in here, then it wouldn't be as favorable because now we know price can come up here. And we're looking for price to come down here. So now our risk to reward is 77 cents, right? We're risking $1 to try to get 77 cents. That's not what you want to do. We want to create situations like this, where even if we're wrong, if your risk to reward ratio on your trades is 4, even if you're wrong 3 times and you're right once, you're still coming out break even or positive, right? And so that's how you can have a smaller win rate and still be profitable. But that'll be something we cover again in another class. Let me hit these questions. You notice that charts look different when you go to buy a put or a call. Do you use this main chart to make those trades, or do you use those charts? I'm trading based on the price action of the stock. That's what I'm looking at, Jesse. So hopefully that answers the question, right? Right now, I'm not looking at calls unless we can break and close above this level. Then I'll look at calls, right? And if we break and close above this level, then my trade now becomes, if we break and close, say we get it right here, right? Now I'm targeting this area and my stop is right below here, right? So I've created a 3 to 5 for myself. And we see that it's likely that we'll go in that direction, right? If we come and look at this, break and close below this level, we came down and dropped, right? We broke and closed again, had a little consolidation, but we came back down. Pushed up, right? Let's look at this candle. We pushed up, but then this candle closed here. It opened up here, closed down here. This is another break and close below this level. We came back down. So these are already highly probable trades that have a good chance of success, and you have great risk to reward. That's how you want to trade, right? So Shanice got a question, but it's too much to type. I'll get you at the end, Shanice. Do you like to implement moving averages or VWAP? No, I don't. I don't trade with moving averages. I don't trade with the VWAP. I trade just like I'm showing y'all right now, right? For me, it's much more simpler. My charts are more clean. There's less data I need to put into effect, right? So think about trading. One of the things that's helped me as well is thinking about trading in situations that aren't trading, right? So if your goal with trading, your goal is to make money, right? If your goal is to make a cake, right? And you have the option of making a chocolate cake using 5 ingredients or a chocolate cake using 30 ingredients, but the results are like the cake is going to still come out the same. It's still going to taste pretty much the same. Or your 30 ingredient cake might taste just a little bit better. All right, which one do you rather make? I'd rather make the 5 ingredient cake. It's less work on me. It's less things I need to keep up with. It's simpler and I still get the result. So for me, if I can trade and set up again this favorable risk to reward for myself, where I know I can lose 3 trades in a row, win 1 trade and still be fine. But also the odds of me losing 3 trades in a row are very low, right? Is good. And so when we're looking at this, you see that playing out, right? So we have a break and close below here. We come to our next target. That's the winner. We close below here. We didn't hit that target. That's a loss, right? Where's the next one? Break and close above. Come up to the target. Gapped up. Hit 2 targets. That's a winner. Break and close below. Hit the targets. That's the winner. Break and close below here. came up, retest, right? That's a winner. All right, so you're going to increase your odds of winning trades, and it's simple, right? So that's just the short synopsis on why I don't trade with indicators. I don't use VWAPs, never used a VWAP. But again, my whole thing with this is I want you to be comfortable making money, and that's my rules. Is it needs to be comfortable, probable, and profitable. Your strategy needs to be comfortable for you, where it's easy for you to use day in and day out. Probable, because don't nobody like losing. Even if you win, one trade you win, it goes 1,000%, and all your other trades are minus 100. That's not fun. Even if you go and you hit your 1,000 and makes up your losses, it's not fun. All right, you don't want to go through a bunch of drawdown. So you want to be probable, and then profitable. You got to make money. All right, you don't want to be cutting your losers, cutting your winners and letting your losers keep going. All right. From that scenario, how would I select the contract? How far out? So it depends. With this right here, where we just had it look, where we were just looking at that level. For me, when I'm selecting the contract, I will be using. Someone asked about plug too, so I'll pull it up. When I'm selecting a contract, I usually keep in mind how long I'm expecting that trade to take, and then the time of the week, and when I'm making that trade. So if I'm expecting a move to happen over 3 days or 2 days, and it's a Wednesday, if I think it's gonna happen in 2 days, that means my contract would be, if I bought a weekly and I think it's gonna happen on Friday, then my contract is either gonna make it or break it on Friday, right? So in that case, I'll buy next week's expiration. So even if I'm wrong on the move, because I can be wrong, even though I'm wrong, if I do become wrong, then I still have all the intrinsic value inside that contract that comes with having a further out expiration. We're gonna have to do a separate Q&A Zoom so we can get on that, because this is for charting basics, but we'll do another Q&A Zoom. So we can do one Monday, or maybe tomorrow. All right. I use the same method to trade plug, right? What do you see? All right. You see plug came in this zone, bounced out the zone, came up here. And so when we're looking at it, we see plug go like this. Boom, 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 boom. Right. And so that's what I'm saying, right? This stuff is simple. It is simple. We see it just do the same thing over and over again. All right. So that was part of what went into me trading plug for the day trade. And then I think we might have swung it too. I might not call it that. All right. But that's part of what went into plug as well. Right. But that's one of the things that added into it. There was multiple factors that went into me calling that plug trade that made it just increasingly more of a high probability trade. All right. Someone said there's real-time data on TradingView. Should we trust the small time trades for a trade? I don't think I've seen any major impact in my trading from when I've had real-time data on TradingView and when I didn't. I think if you're scalping, like you in and out of trades 1 minute, 3 minute, then yeah, it probably will be better to have the real-time data. But if you're going to be swinging a trade for 2 weeks, having data that's delayed by 2 minutes or whatever the case might be isn't that big of a deal. All right. See these questions. All right, I'm gonna come back to the rest of these questions at the end so we can make sure that the charting is covered, right? All right, so we covered trend lines. We covered how to identify trend. We covered supply and demand. We covered support and resistance. That's the basics really right there. Does anybody have any questions about that? Does anybody have any questions about that? What up, Moody? Does anybody have any questions about those? Support and resistance, trend line, consolidation, identifying zones, any of that? I'm gonna go clean up the rest of these questions in the chat. All right. If y'all got questions about trends, charting, put them in the chat. Cool. Can I explain the candle open and close again? For your basic candle, all right. Green candle, that means our open was here. Close was here. This is our high point, this is our low point. Now you can also see all of these values in the top left hand of your trading view. Right? When you hover over a candle, it'll show you those values. Red candle, open was here, close was here. Here's your low, here's your high. The charts be lying. The charts be lying. It say that SPY hit 395 and you know SPY didn't hit 395 on Friday. No, SPY didn't hit 395 on Friday. I don't know why your chart says that. It hit 395. It was at 395 on Thursday. And we can see if no, it wasn't that. So maybe you're looking at the wrong one, or maybe you have a different type of candle. Different types of candles will print different data points. John asks, what's my criteria for entry, break, and retest? Just break, volume. I typically not looking at volume either. This is exactly how my chart looks 95% of the time. This is how my chart looks, you know, with some levels maybe laid out on whatever I'm looking at trading, right? Plug was annotated like that because I taught a class on it after I took the trade, right? But this is how my charts will look. My criteria for entry will vary based on whatever I'm trading. So I scalp, I swing, I day trade. And I took the route of learning a bunch of different strategies and being able to apply a bunch of different strategies across almost any stock rather than just learning one strategy or just learning to trade a couple of stocks. So I will trade breaks and enter at a half position on a break and then enter the full position on a retest for the continuation. Unless I'm scalping, if I'm scalping, I'll just trade the break. You know, I'll just take 10% or 20% off the break. Or what I'll do is, like I did on Roku the other day, is I scalped the break and then got in a swing trade after the retest and just traded different contracts but caught the same move twice. Shani, so with this simple charting method, it's best to pick 2 or 3 stocks and trade them repeatedly to get comfortable with price action. Yes, if you're a beginner, then the best thing for you to do, in my opinion, would be to trade with the same couple of stocks over and over again and get used to trading those and get used to reading those charts and breaking them down, right? Other things you can do if you really want to speed up your learning curve, because one of the most common questions is how long does it take to become profitable? But it's not a matter of how long, it's a matter of how many times you need to do the right things to get that, right? Just like if you want to get better at playing a saxophone, me and you can both start today, but if I practice every day for 2 hours and you practice once a week, by year 5, I'm gonna be a pro and you still gonna be okay, right? Same time span that we've been doing this thing, but I put in more hours of practice, or I studied more, or I listened to saxophonists more, right? Same thing with trading. So get comfortable trading 2 or 3 stocks, but also come and chart stuff right now. It's the weekend. The market's not moving. So just go pull up a chart some stuff out, right? Get used to plotting points, pick random stocks, pick a random stock, pull it up on a daily. This was a bad pick. It really don't matter. You got a price on it. Pick a bunch of stocks and just chart them out. See what you can see. Go to the monthly, lay out your levels. Go to the weekly, lay out your levels, right? And see what you get from it. And then you can do it live on Bitcoin, right? So pull up something that's live, take it down to a smaller time frame, and then chart it out on a smaller time frame and see how your stuff is going in real action. So if you set, and this is what I told somebody the other day, It's like set yourself a 20-minute timer, throw Bitcoin on a 5-minute chart. Not 20 minutes, throw it on a 2 or a 3-minute chart. And then just chart it out, right? Chart out the levels, chart out the zones, chart out trend lines, chart out things that you're seeing, look for potential trades you could take, right? Right, what did we just talk about? We just talked about trend lines, we just talked about trend line breaks. What do we have here? 1, 2, 3, we have our trend line established, we broke above the trend line, now we're shooting up. It's the same thing we just looked at on a whole different chart, whole different time frame. Same concept. If you were trading Bitcoin, you could have took this and made money, right? So that's what I would suggest doing. I think the next level of plug could be 24. 24. No, none of these candles. So this is the only candle that's resting at 24, these two. Right. So for us to get to 24, we first need to break through all of these wicks right here. Right. So all of these wicks right here at 25.50. So it's that buyers are stepping in at 25.50. So that's before we get to 24. We had to come back through 25.50. We also need to come back through 28. Right. And so that's why I look at the wicks as well, because that's still showing us where people are coming in. Okay. For a swing trade, you saw me call out multiple swings at the end of the day. For a small account, it's better to follow them all. So if you lose one, it can be offset by the other two. So as always, anything that we put in our Discord is not financial advice. It's not recommendations. It's not us telling you what to do, how to do it, when to do it, how much to buy, what to buy. All right. We're sharing things that we're potentially trading or ideas. What you do on your account is up to you. However, if I was in your shoes, and I was looking at following along with some trade ideas that I saw, then my ideology would be based on the person's track record that I'm following along with. If I know that they usually win, then I would look to try to invest the same amount of capital in all their positions so that if one does go bad, but I know they do usually winners, then the other ones will be offset. And that's my technical and legal way of answering your question. Are these techniques more so for swing trades or scalping? These work on everything, right? Price is price. The price is going to move, how price is going to move. Some of the things that you won't see, stuff kind of work the same to some degree, is stuff like meme stocks or news. So things like news, the meme stocks, short squeezes, those can lead to some things going out of normal, right? But those are also things that are out of the normal. Can you chart SOXL? Has a reversal yesterday. Sure. All right, so what we see on SOXL, we see our bounce here, we see resistance here, right? We see we had support, bounce, 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 gap up right here. XOXL, for those who don't know, is the triple leveraged ETF for the S&P 500, right? So because SPY moved up heavily, SPXL did the same, right? SPXL went up 7.33%. SPY went up 1.55%, 1.55 times 3. Oh, that's 4.65. So that one did even better. That's beautiful. I like it. But that's what SOXL is. And you see the chart is the same as SPY, right? Trend line down, based out, gap up, SPY, trend line down, based out, gapped up, right? Boom. Now the chart looks exactly the same. Okay. So what is confirmation of bounce or break on these lines? Let's go back to that Bitcoin we were looking at. We was on 3 minutes. So confirmation, for me, what I'm looking for confirmation is a pullback after the break. And sometimes you won't get the retest. So in this instance, we did not come and retest this trend line, right? But we did have our red candle here and then a green candle that took out the red candle's high. So after that, we're looking at moving up. That's getting a little more advanced, but that's the answer to the question, right? So my confirmation is going to be, logically speaking, the confirmation is when we make these new highs, and then we get a low, is that new low that we're getting going to take out the previous low, like we just explained with the highs and lows. So if that low goes and takes out, right? So to put in perspective on this Bitcoin chart, if we broke the trend line and then we came back and made a new low, then this is no longer valid for a move to the upside because we've now established a new lower low as well, right? So that's going to show me, nah, this ain't gonna cut it. Now we came down to test this level. I'll make that a green line. And then we pop back up. That's saying, okay, cool. This is a higher low. So that's confirming for me that now we are moving up, right? Again, this all goes back to the highs and the lows that we covered at the beginning. Would it be better to use supply and demand when the candles are wicking and use support and resistance when the candle is flat, or it doesn't really matter? Both of those need to be in consideration, right? So regardless is the matter of, again, the concept, right? Because we see, for example, here with Bitcoin, let's go ahead and lay this out, right? So yeah, we could say we have a pretty even resistance at what's that, 21,300, right? And we see right here we rejected 21,296, so it's about $4 difference. It's about a $6 difference right here, right? So it's the same thing. It's the same ideas. You want to make sure that you clear that area. So this is why when it comes to that supply and demand trading or support and resistance trading, that's why I would take this trade. Is because what I'm seeing, again, what is the story the candles are telling me? The story that I'm seeing is every time we come up here, sellers step in and buyers lose control, right? We've seen that happen over and over and over. We can't get a close up here, right? So we're failing to close up here. We just keep rejecting. We get this candle, and now not only have we closed above it, but we shot through on it. And the high of this candle is the same as the close on this candle. So that's extremely bullish, right? So that's why you would look at taking that trade, regardless of, trying to pinpoint these exact specific spots, right? Let me back to the chat. What action did I click to get those prices outlined in white on the chart? This is pivot points, high, low. That's what that is. And it's going to plot those levels out. Do I usually do my charting on the 1 hour? What time chart do I find myself using the most? That'll depend. All right. So if I'm scalping, I'm on I'm switching between the 1, 3, and the 5. I will just trade the 1 minute. I like to look at the 5 to get a bigger confirmation of what's going on overall. So when I'm scalping, I use the 1, 3, and the 5. I use the entry on the 1. And just use the 3 and the 5 to gauge overall trend. It's gonna be interesting to see what happens here. We just broke that. But so the 1, 3, and the 5, if I'm gonna be day trading, then I might be looking at the 30, 15, 5. And then if I'm swinging, I'm looking at the 1 hour and the daily, depending on how long I'm trying to swing. Usually if I'm swinging something over the weekend, and I have like Zim, for example, I'm currently in Zim puts, right? So I'm currently in Zim puts for like 40 something days, 46 days or so, right? So I'll look at the weekly as well, and I'll look at the daily. All right, cool. Can I recommend 3 stocks to trade for beginners? SPY, QQQ, Apple. It depends on what you want, right? So keep in mind that beginner, there's a lot of terms that get used that are very arbitrary to the individual skill set. Um, again, related outside of trading, right? Shaq being a beginner in basketball and Nate Robinson being a beginner in basketball. For y'all who don't know, Nate Robinson is like 5'5" or whatever, was an NBA player. And you know, Shaq is 7 feet, right? Shaq is huge, Nate Robinson is small, right? So they're both beginners, but what you would have them do or what they would be better at doing is going to be completely different things. Shaq wouldn't be shooting threes for beginners. He's 7 foot, 200 or 300, whatever many pounds a dude is, right? Whole different ball game. So if you're a beginner with a smaller account and you want to stick around stocks that are smaller in price, but can still get some movement, like Plug, like Neo, like Lucid, like airline companies such as Delta, American, right? You can do companies like Dish, Verizon, Kellogg's, Kroger, right? So you want to look at stocks that are pretty much going to be between like the $15 to $50. You don't probably want to push too much higher over that. But that's what's good for you to trade if you have a smaller account because the contracts are going to cost less. But if you're a beginner and you can be a beginner, you can be a beginner and have a $10,000 account. I would say get on SPY, because it's going to be more liquid and you're going to be able to catch more moves and it's going to be a little more volatility. Shanice, my bad, LOL, the Heikinashi view. Exactly. I knew what it was. That's why I said, look at what type of candle you're using. Carmel said attend one of Pastor Prince live tradings if you can. He explains things. It's great for beginners. Yep. Pastor Prince live trades for us usually Monday, Wednesday, Fridays. So if you're in the Discord, Monday, Wednesday, Friday, tap into that if you're able to during the day. He usually goes from about 9:30 to 10:30, I think. Why'd I draw the trend line like that, waiting for it to touch again? So here go another example of a trend line, right? And this is another pattern, but this is a falling wedge. But we'll get into that when we go to like more advanced type of stuff. But yeah, right, we have the trend line form. And that's it. Again, the trend line getting drawn out is just connecting highs or connecting lows, right? So it'll be just like doing this, right? I need a different color. Well, that's it. Can I explain again how I use my charting to call out a stock for a put or a swing? Sure. Nate's like 5'9". Thank you, John. Rosa, yeah, you missed everything. Class is over. All right. So let me go back to the question. So yeah, when you're looking at this, and again, this is just the simplest form. But again, when it comes to trading off of it, back to this plug example, right? Once we establish that the way price is moving is that price is going from here to here, down to here, back up to here, this trade becomes like a no-brainer just off of that principle. If we go back, right, again, we see price is at this level, it comes up here. After that, comes back down to the same level. Okay, cool. Then what does it do? It comes back to the same spot. Then what does it do? Comes back down. Let me pop. Then it comes back to the same spot, right? You start getting into patterns. You're gonna start knowing about double tops, triple tops, bottoms, all of that. Right. It's not so important what it's called. It's more important if you understand what it means. This is what it means, right? So you can say it's a double bottom, it's a triple bottom, whatever. Not the point. right? The point is, we see price coming to the same spot. What did it do last time? It went up. What did it do the time before that? It went up, right? So when it comes to calling a trade or taking a trade, not just me calling a trade, but for you to be empowered to take your own trade on your own analysis, which is the whole point of this whole Discord, for y'all to be able to move on your own. Then what you're looking at is, well, damn, it went up the last 2 times. Let me see if it's about to go up again, right? And when you start drilling down in the candlesticks, then you see there's this hammer candle at support, which is going to show us bullish indication of a reversal. We get this next candle. This candle comes up and takes out the high of this candle and the high of this previous candle. All right, so we just took out 2 highs. All right, that's where we're like, oh, damn, it looks like it's about to go back up here. All right, and what does it do? Comes right back up there. So now that it's up here again, we still have room for maybe one more candle to squeeze out up here until we're looking at the potential for it to come back down here again, right? And we don't expect by any means that means that plug is going to forever stay in this range indefinitely. At some point, it will break either way, and then it will likely continue to the next level, which we would be able to identify if we came to our monthly chart and marked up the levels like we did earlier today. All right. You like trading indices for its movement, or indices for its movement and liquidity, but you're told it's tougher to trade and takes more discipline. Yeah. The only thing I'll trade, the only index I'll trade is the SPX. That's the only index I've traded. And I don't find it to be tougher. I don't really think it's tough. Because again, tough is what you make it, right? So a lot of people looking at charts was probably tough until they start this class. If you go chart up 5 charts for every day the rest of this month, in October, charting isn't going to be tough to you. You're going to be like, bro, I chart in my sleep, dog. It's nothing, right? So it's just a state of mind that you put yourself in. I don't think trading on a 1 minute all day is tough. I've done it. I've live traded on the 1 minute all day. It's not tough. A lot of people are intimidated by it. So to your answer, I don't think it's tougher to trade an index. I think you just have to learn to trade it. So yeah, more discipline. Yeah. Right. But you have to learn how to adapt your trading methodology and style to what you're trading. And that's it. Boom, 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 boom. So what contract would you take on plug? At this point, I'm not taking nothing. I took calls. I got in plug calls right here. On the 7th is where I called out plugs in the group, plug calls. That's when I got in. At this point, I'm not looking at taking a trade on plug for the reason we talked about earlier when we look at risk to reward. On the long side, if I get in plug, then maybe I'm trying to shoot for right here. So if I'm gonna take it, then my stop can be the low of this candle, which is giving me a 1.27 risk to reward. Maybe, right? But compare that trade's risk to reward and likeliness to me entering when I did here, with my stop being below this level and my target being up here, right? So this trade, I got a target of 17% profit or a 5% loss. This trade, I'm targeting a 4.2% profit or a 3.3% loss, right? It's not worth it. It's not worth it. It might play out, but it's not worth it, right? So what I would look at is basically whenever plug makes a new low, if plug comes up one more day and then the next day it takes out that low, then I would look at getting into puts and swinging puts back down here. And my high would be above that, right? So what I'm looking at is if plug comes and puts a candle right here and then takes out a low the next day, right, to show me that we're starting to move down, then my trade looks like this. Boop. All right. And so here I am now trying to grab 14% and I'm risking 7%. And that's how I want to structure my trade. right? My risk to reward is favorable. And I already am looking at the fact that the past 3 times we dropped down at this level, right? Thank you. It's making sense. Do I have a class that goes over how to get in and get out of contracts with your broker? No, that would be theoretically impossible as new brokers are coming out on the regular. And so I don't know how to take trades on TOS and M1 and Robinhood and Webull and E-Trade and Interactive Broker and TradeStation, right? Too many brokers. So if you're confused on how to get in and get out of your individual brokerage, I would say go to the website or YouTube a video for that specific brokerage and what you're looking at learning for that specific brokerage. All day though, yeah, I did live trade a couple times, all trading day. When trading SPX or SPY, do you watch QQQ and ES at the same time? Yeah, I'll look at ES when I'm looking at SPX. I don't do them like faithfully where, I'm looking at both. Sometimes I'll just look at SPX and I'll set levels on SPX, or I'll set levels on SPY. And it's gonna sound weird. I'll set levels on SPY and they'll trigger on SPY, and then I'll just take a corresponding trade on SPX. And doing it that way, looking at ES, again, from what I've looked at with my trading results, I haven't seen a big enough difference in the results for me to just set in stone that it's bad for me to do one way, or super great for me to do another way. On plug, if I was going to get puts, I would probably get, when I'm trading, I'm usually getting at the money or one strikeout. All right. James, are you looking at a head and shoulders on plug right now? Is that what you're trying to say? You're trying to call this a shoulder, this a head, and this a shoulder? I'm gonna say no. The only reason I'm saying no is that the shoulder and the head are just too close together, bro. Um, it's just too close. 1 second, y'all. It's my dad call. All right. So yeah, James, just because that's so close, I wouldn't look at that as being a head and shoulders. Um, Something like this. Let's look at USO. Right. USO, you can see a little more clearly, right? So you see this shoulder, this head, this shoulder, right? We look at ZIM, see this shoulder, this head, this shoulder, right? Or you can look at these shoulders right here. All right, so you see like the big difference between the gap between like the head and the shoulder, whereas on plug, oh, come on now. On plug, it's just that shoulder peak would be too close to the head. All right. Time is it? All right. Party City trade setup. Party City is a gap fill. Gap fill above around $3 area. All right. So we're looking at targeting up here. And then what you're looking at as well is, again, look at this rejections. All right. So what we see, price came up, rejected, price came up, rejected. This time price is closing in here. All right. So this Party City trade is me anticipating that we're going to continue up here, because this is the first time we've actually closed up here. So that's showing me that, again, what's the story? Story is saying bulls are coming in, up, sellers are stronger. Bulls are coming in, up, sellers are stronger. Bulls are coming in, sellers ain't push them out this time like they did these other days. All right, so that's what I'm looking at on Party City. Am I planning on sharing this recording in the Discord? Yeah, that's where all our recordings are. Look in the recorded classes section of the Discord. And there's actually an Excel sheet that has all the recordings. I'm gonna take 3 more questions and I'm gonna bounce For swing trades, do I do more than 1 or 2 strikes out if the contract is 7 days or 14? So yeah, and usually my strikes out the money is going to be in line with my period of expiration. So I don't like going if I'm 2 weeks out, I'm comfortable going 2 strikes out the money. If I'm depending on the move I'm anticipating too. If I'm anticipating a huge move, then I don't mind going a little like 1 more strike out the money. If I'm going 4 weeks out, I might go 4 weeks out the money. I mean, 4 strikes out the money, but very rare. And I'm not really gonna push like 10 strikes out of the money unless we're on a monthly chart as support and I'm buying a contract that's a year away. Like if I was looking at Carnival down here at this monthly support or monthly demand, then yeah, I could go still 10 strikes out the money is a lot, right? So I could go like 4 strikes out for like 3 months and be comfortable with that trade. All right, thanks, Jordan. Can you explain inside bar and how you use it to get in and out of the trade? Yep, we traded the inside bar breakout on Roku the other day. Zoom in. All right, so how I trade my inside bar breakouts is pretty simple. All right, what's an inside bar? Is when the low of this candle is inside the is higher than the previous and the high is lower than the previous, right? Which forms a candle that is inside the previous candle. I just like to trade the break outside of that, and I like to target the nearest high, which will be here, right? And that's what led to the Roku trade that I called out in the Discord. Easy money, cool. That's how I trade inside bars. Thanks, Jay. Class was very informative for sure. As for support and resistance goes, there's a SRV2 indicator on TradingView that's been helpful. Thank you for sharing. I'll pull that up. SRV2. Suppose this is it. I guess you'd have to come and mess around with these settings or something for the SRV2. But thank you for sharing. And that's it. Inside bars aren't bullish or bearish in their own nature. Usually, you gotta look at the overall trend and look at where you're at. This is what Jay James was talking about. This stuff. Man, this is nice. This is nice. This is nice. This is nice. Yeah, right. So this is my last one for that Roku trade. What was so cool about that with the inside bar is that we were at an inside bar in demand, right? So we were at inside bar, but we're also at demand. We see that we're rejecting. That's how you get more confidence in your trade. That's how you get more high probability trades. Is that not only could we have traded this just because it's bouncing off demand, we also trade the inside bar and join those two together. All right, that's a wrap. Hope y'all learned something. Hope this was helpful. Hope everybody now can know how to chart. If y'all have any questions, comments, concerns, holla at me. I'll respond to these. What's today, Saturday? I'll probably respond on like Tuesday. This recording will get put up. It'll be on my YouTube. It'll be in the Discord. Tell a friend to come to the chat, you know, whatever. Have a good day. Have a good weekend. Be blessed. Be nice to people. Love one another. All that good stuff. You're welcome as always. Oh, if you want to be on a member-to-member team, DM me. I got to put the information together for that. But yeah, man. Y'all be smooth.